What's up, pups? How's everybody doing tonight? Good to see you. What's up, Shishio? What's up, Tam Tam? Cool. Let's just get right into it. I want to go back and pick up with the liquidity, but let's check the charts really quick and see where we're at. Is this loud enough? Hello, hello. Check, check, check. All right. Good. And Theo Sapien, what's happening? What's happening, brother? All right. We got a few more mods. Wonder what Deerslayer is up to right now. Let's see. Let's just go look at this BTC chart really quick. See what this button does. Huh. Cool. How's everybody doing? 33 people. Everybody smash the like button. What's up, T.S. Pedro? How's it going? How's it going? Let's go check this BTC chart real quick before we jump into everything. All right. You guys remember I drew this the other day. I think Fast Abdul was on the show. And I said we're going to come up here and we're going to hit this. But I think we're probably going to have a little dump before we blast. Maybe. Because, well, that's just the kind of things that happen sometimes. So that's my bet. And we're doing that right now. We are already moving up to that. Slide this over. We've made our way up. We're making our way up. I think we're going to come up and obviously tap that. I said 113. This is a really important line. This is a line going all the way back here to December 2024. You can see we've tapped it there January, tapped it there in May, and I think we're going to tap it again. That's my expectation. That's why I drew this. And then I would think we're going to have some kind of rejection, but I don't know how low we could go. Maybe it's just going to be a little tap and then scare people a little bit down to 105, maybe 99, maybe even 95 to capture this line. You can see coming down with these contact points, but we could even go a little bit lower than that, scare everybody off, and then go up for that one. What did I say on Monday or the other day? I think 130. There you go. Yeah, it was a fib. I think it was a 1.414 there. Still looking good. It's still doing what I was expecting it to do. We're looking good. But ETH looks really nice. I mean, look, it is pumping right now. This is good. I even expected ETH to do something similar. We've already gone past, I guess I was expecting something like this. This would be this resistance line right here. But we are rejected right there at that line I've had here forever since May. And I think the same thing. If BTC does that, we'll have a little dip before we actually launch and blast off, which is what I do think is going to happen because it's what nobody's expecting. Everyone is expecting us to just come down. But you know what? I'm open to anything. Maybe we get a summer surprise. Really, I don't know. But I'm ready for whatever. But this looks good to me. This, I think, would fake out a lot of people. So let's go ahead and pick up with the liquidity, and then we'll keep an eye on the charts as well, because I do want to get through those lessons. I do think it'll help you guys as we go forward. I think it's a perfect time to learn liquidity. Now, if you guys want to see parts 1, 2, and 3, go back to yesterday. These are all CryptoSloth's lessons that he made a year ago, and today we're going to pick up at lesson 4. What's up, Alpha Hover? How's it going? Good to see you guys. You guys are the smart ones. You guys want to learn liquidity. That's good. And then we'll keep an eye on this. Is this ATROPA? Look at that. This channel. So I drew this channel. It's doing exactly kind of similar to what Bitcoin did starting in 2022. This is an awesome move right here. We've been tracking this forever. Been playing out perfectly, exactly as predicted. All my targets have been hit right on the nose. You can see where we got rejected. Had a massive fake out, broke under the channel, and got bought up bullish as, which is what I told you guys. ATROPA is bullish as fuck, regardless of all the Maria FUD. And like I said, I'm not personally invested. It's not about do I like Maria or not. They're the character they are, but I am still bullish on ATROPA. Absolutely. That has not changed. What's up, Hans? How's it going? What's up, Azek? Rahman, how you doing? Good, we got a mod in here today. That's good. Great move to teach liquidity. Yeah, let's do it. Yeah. You guys got to at least understand, even if you're confused, you need to get familiar. It's going to help you understand why the markets move the way they do. So let's just get into it. And out the side of my eye, I'll keep an eye on these charts and pop in and out as we need. But we are being rejected exactly at these lines that I have. One thing for you guys to know, if you do get into TA, because we've gotten a lot of those messages lately, you do need to learn to draw your own lines. I don't look at anybody's TA. I don't care what anybody does. I draw my own lines, and I learned to do that. And a lot of people don't like where I draw my lines, but you know what? My lines are always respected. So, and that just takes time. But that's number one. If you can just start doing that on charts, start drawing support and resistance, start getting used to making mistakes, you'll learn. That's how you're going to learn. It is not a solid science. There's a lot of it. You see where I put my line, but you see where the candle, the wick got, you see? So my line was really in an important spot. Somebody else might have drawn, the wicks, I don't know. But you got to start practicing and learning how that works. What's up, Luna C Point? How are you? Welcome to the team. We got a couple mods in here today. This is great. This is great. Good to see everybody. If you guys know anybody in my time zone as well, or even a little later, that would be great. Because sometimes if I go earlier, it may be tough to get some of you guys in here. Because I am 9 hours ahead of where I used to live in LA. So, all right, let's get into this. Where are we at? All right, this is lesson 4. Guys, we did lessons 1, 2, and 3, I think yesterday. Trade what you see, not what you believe. 100% Shishio, man. You know me, I only look at charts. It's not personal. I just see what's in the charts. They tell me everything. Yeah, isn't it crazy? How long ago did I draw this, guys? I drew this. Well, I drew this here, so we must have been here. I think it was the video I did in May, so it's almost 2 months ago. I drew this, and it's not exact, but damn, that's pretty good. We came down, we hit it, and we swung up. We are making contact, which is what I thought we'd do, and then I think we're gonna have that little dip. So let's see what happens. You never know, though. Maybe we had a big fake out and we rip, but I think a dip makes sense. Even the stock market's a bit overbought and what have you. So, and the dollar looks like it needs to bounce. It's really oversold, guys. The dollar, the Dixie, really could use a rally here. So, yeah, let's see what happens. Yeah, it's pretty close. It's pretty close. Nobody, who else does this, right? I'm giving you guys. I don't go back and do like, this happened in the past. I show you guys what's coming in the future. That's what my focus of my work has been when it comes to charting. I wanted to be able to show you guys how price is going to move a month, 2 months into the future, right? You can see this one I drew in, this is PulseChain. I drew this when? I made this video January 6th. So I think these are the most helpful. I don't get you guys into too much about, moving averages and Bollinger Bands. I just go, look, we're here. I think that in 6 months from now, the price will be here, or 2 months from now, or whatever. What's really interesting is soon we'll be doing bullish targets, because we're going to break out soon, and then I'll be able to paint you guys pictures of where the price might be into the future. And that's going to be really exciting, because we're going to paint price action with bullish targets finally way up in the sky. So that's going to be a lot of fun. To show you guys where I think in 6 weeks, 2 months, 6 months, the thing could do. Because tracking price action is hard. When you're drawing, I'm showing you guys how the price is going to move, so you guys can learn like how the market makers move these things. Oh shit! I'm sorry. Oh fuck, guys. Thanks for the heads up. Oh, you guys weren't even. Oh, there it is. Yeah. Okay. There you go. So this was the ETH chart. I don't know how much you guys missed. There's a bit of a delay, isn't there? All right. I got a little bit of a cold. I don't know how in the middle of the summer this was possible. But we had a heat wave, and it was really tough to sleep. So I think people got sick just out of having a hard time to sleep. It was 93 Fahrenheit, for Central Europe, which is really hot because nobody has air conditioning out here. So yeah, you can see how this moved. And, you know, we drew this almost 2 months ago, right? We didn't have anything here. We were over here, and I said, look, we're going to do this, come down, we're going to sweep up, grab this, and then I think we're going to have a dippy poo there. I think you guys missed this. I talk about ATROPA. This channel, it's doing very similar to what Bitcoin's been doing. I think it's just going to go up and to the right. That's what I see for ATROPA. You can see how bullish this buy-up was, which I told you guys, ATROPA is extraordinarily bullish. I was telling you guys, people got trapped. I bet you a lot of people sold and tried to take profits and thought they were going to buy back in, but this just wrecked you because this is an extraordinarily bullish chart, okay? ATROPA is insanely bullish. Let's go back really quick to, what else was I showing you guys? Oh yeah, I was showing you guys this. So, you know, the key is really to be able to go, look, you know, I know you guys, you know, who cares about moving averages and Bollinger Bands, all this stuff. You guys want to know what's the price action going to look like 6 months from now or 3 months from now. So that's always been the focus of the work, right? To be able to look at this. So this was January 6th, and to go, look, I think based on the activity and the action here and the candles, we're going to paint something like this. And this is pretty much what we did, right? So what I was saying is it's going to be really exciting now when we finally break up and we head for blue sky territories to be able to start to, you know, look at what the price action might look like as we get to $5 billion market cap and $10 billion market cap, and we're up in the air. It's going to be a lot of fun. It's going to be a lot of fun. You guys can see the chart now, right? I think it's finally up there. Cool. Let's get into liquidity, and then we'll come back and we'll take a peek and see what these charts are doing. But yeah, this is being rejected right at this line. And like I was saying before, if you want to start learning, first thing is just start learning to draw lines, because that's going to teach you how to make judgment calls about this. Because you have to do that. You have to be comfortable with your calls of what you're drawing, right? So this was the one we came down, and now we're actually breaking out here earlier. This bull flag is breaking out, but the bull flag doesn't matter to me. I know a lot. You've seen probably, I quickly saw some headlines on YouTube that were talking about, oh, bull flag, this and that. There are other patterns that matter more than other patterns. And right now, this bull flag just doesn't matter to me. And, you know, a lot of crypto guys are just, they're very green. They don't really understand what they're looking at, right? The pattern that matters to me is this one. And that's why I focus on this chart, because these points of contact trump any bull flag to me, okay? And then you've got an inverse head and shoulders right here, right? So you have to know when to ignore or what to focus on. You're not ignoring anything, but you're knowing, you know, your discretion as you get experience is going to be like, what is important? This is important, this inverse head and shoulders, and this resistance line right here. I don't give a fuck about the bull flag. It just doesn't matter to me right now. And it shouldn't matter to you because it's not the important play right now. The weight heavy is for this line right here. So that's why I think possibly a rejection could happen right there. But let's see what happens. That's what we're moving toward. Yes, it is a bull flag, but there's just other things matter more than other things, right? So let's see what happens. All right, let's get into liquidity. Where are we at? All right, so we're starting at lesson 4. 1 through 3 was yesterday. If something happens in the charts, we'll switch back over. But let's keep learning here. I think this is important stuff. And once again, shout out to Mr. Sloth for doing an amazing job and making some amazing videos. The link to his channel and the videos, I believe, is in the description. And definitely go smash the like button or tell him hi and how much you appreciate the hard work you put in, because it's super cool. So we're going to check this out. All good. Thoughts on the SP? Look crazy bullish. See it in crypto having. Yeah, okay, we'll go look at that in a little bit. But like I said, I think it is overbought. You're talking about SPX, right? I think it is over bought. Maybe a pullback does make sense, right?
CryptoSloth here, here for lesson 4 of my liquidity providing series. And today we're going to be talking about reading LP data. So I'm going to be going over some really important metrics that you need to be able to understand in order to decide if a specific pool is good to provide LPN, if it's not good to provide LPN, or just be able to analyze like what's going on with the liquidity of a certain coin that you're interested in. all of these metrics are really important. They're the bare basic ones. There are probably some more advanced ones or more really specific ones that you can learn later. But these are like the bare basics that you definitely need to know to be able to understand what's going on with LP and to help you make the decision on if this is a pair that you want to be providing liquidity in. Yesterday, we talked about permanent loss, like the pros and cons of it, how to understand it, and how to assess the risk based on a certain pair that you're providing in. And today, we're going to be talking about some metrics surrounding liquidity. So I hope you enjoy it, and I hope you find it useful. Let's dig on in. So the first one I want to talk about is...
All right, everybody smash the like button while I get this. Hopefully the internet doesn't give me issues. Let me see if I need to close some stuff here. Hang on, maybe I got too many charts open. Let's close some of these charts.
Happiest people.
Do not raise.
All right. Guys, I'm just closing some stuff down so we don't lose connection because I think the video was downgrading or whatever it was.
Because the
secretly create.
All right, some cool stuff. Let's keep this around. All right, everything looks good. Back to that.
Is volume, and all volume means is the amount of money being traded within a certain pair. And so generally high volumes means more fees, low volume means less fees. And this makes sense because the fees that you're earning for liquidity providing is a percentage of each trade. And if volume is the total amount of trades that are going through a specific pair, then the fees for a given day or a given period of time is a percentage of the volume over that period of time. So as a general rule of thumb, pairs with high volumes are more favorable than a pair with low volume, because if there's more volume, that means there's more trading, which means you are earning more money. So you want to try to find pools that have a decent amount of volume going into them, especially, and we'll talk about TVL a little bit, a good volume to TVL ratio. So here we just have like an old volumes of the Hex USDC 0.3% pair, and you'll notice that there are some days that have higher volume and some days that have lower.
All right, really quick. You guys are talking about the SPX. I'll show you really quick. We're right in my resistance line. Okay, this is my chart for SPX. And this is my line that I've had forever. If you go back in my videos going way back, and we are hitting my line on the nose. So that's why I think, you know, we're at a line I thought that was important, that we could possibly get rejected. So let's see what happens. Okay, so that's where we are right now. That's why I think maybe a pullback is coming. It doesn't have to. You're right. There could be a lot of exuberance, and we could keep going, but let's see. I don't know, but I think a pullback here makes sense. Yeah. Where the frick?
Lower volume. This is pretty typical, but generally you want things that have higher volume. You can also, in many of the liquidity dexes, you can sort the pools by volume. So if you have a certain token, like in this example, Hex, like, hey, I want to provide liquidity with my Hex, but I'm not sure which pair may be the best. Just sort it by volume over either a 24-hour, 7-day, monthly period, and you can kind of see which one you might want to start looking at first to provide liquidity in. TVL. So TVL stands for total value locked. And all that's just a fancy way of saying the amount of liquidity that exists in that specific pool. So if you remember, fees are distributed proportionally to everybody providing liquidity at that specific price. And so the more TVL that there is, the more competition there is for fees. The less TVL there is, the less competition there is for fees. And this makes a lot of sense, because if the money is being distributed amongst more people, then your cut of those fees are less, because there are more people getting that money. And if there is low TVL, there's low competition, you're getting a higher percentage of the fees that are being distributed, because there are less people that those fees are being distributed to. So we just talked about volume and we went over TVL here. Now, ideally, you want high volume, low TVL, because that more fees are being earned, but they are being distributed amongst a smaller number of people. So if you're looking at volume and TVL, the most ideal is high volume, low TVL. Now, there's a flip side to this, where that TVL means the amount of liquidity that there is. And so you don't want too low TVL because that means no one really wants to trade with it because there's a lot of slippage, there's a lot of price action, there's a lot of volatility, and people may not be able to enter or exit. Say if there's like $5 of liquidity, nobody's coming in with $1,000. But if there's $1 million of liquidity, plenty of people might come in with $1,000. So there's a balance here where you don't want such a low TVL that nobody can trade with, but you don't want so much that like there's so much competition for the fees from a liquidity provider standpoint. But make sure you're looking at volume and make sure you're looking at TVL. Next, this is more has to do with you personally when you're setting your position, and this is your LP range. Now, we touched on this in the previous video about impermanent loss, but tighter range equals more percentage of coins being traded, which means more fees. So if you're going for fees, you're trying to get high APRs, ideally, you would be putting your range as tightly as possible to be earning more fees. The wider the range, the less percentage of coins that are being traded, so there are less fees, and this results in a lower permanent loss. So if you have a more long-term position, you don't really want to experience 100% impermanent loss in either direction. You want to be earning a decent amount of money over time. A wider range is what you want. And this corollary between tight range, more fees, wide range, less fees makes sense. Because if we have a tighter range, more of our coins are being traded with. So we're providing more of a service to the market. So we're entitled to more fees. And the opposite is true for a wider range. Less percentage of coins being traded, less of our coins are being used currently to service the market, which means we're getting less fees. Now, these two images I took from a while ago from pullfish.xyz. And so it's basically showing that exact scenario. With $10,000 in this wider range right here, you're earning $83 a day. This was many, many months ago. But if you put that same at that same given period of time, if you took that same $10,000 and really concentrated it around price, which is this red bar, you would be earning $310 a day. So there's a humongous difference between wide and short ranges, wide LP ranges and short LP ranges in terms of the APR that you can make. It's the difference between 306% yearly APR and 1,133% at that given point in time. So the only thing you have to keep in mind with that is your impermanent loss risk. And the other thing you have to keep in mind with that is timeframes. So if you remember in these two graphs that we were talking about before, if the price goes outside of your range, you're at 100% impermanent loss, but you also are not earning fees anymore because you're only earning fees when your coins are actively being traded with. So when you have a tight range like we have up here, yeah, you might be earning $310 a day, but how many days is your position really in the money for? Is it even in the money for a day? You don't know. If it's like plus minus 0.5%, yeah, you could be earning $1,000 as long as it stays in that range. But if it goes out of that range in 30 minutes, well, you've only earned that APR for that 30-minute period of time, and now you've experienced 100% permanent loss in the direction that the price has gone through. So you need to take into account like how long do you want to provide this liquidity for? Are you here for a short flip or like a short APR, like a day or two? Well, then maybe you keep it at a tighter range. But if you want to make sure that you're earning money over a long period of time, then you probably want to widen your ranges a bit. And this is from another website, and this fees, this is the 24-hour, monthly, and yearly APR. Given the specific ranges. And then all this is saying is all that I'm trying to get across with these three numbers right here is that the longer that your position is in the money, the longer that price is trading within your range, the longer you're making fees for. So a wide range that has a lower APR may actually be more advantageous and make you more money than a tight range with less APR, with a lower APR. And that's because the wider range is probably going to be in the money longer. And that's really what this second graph over here is getting across. Is like the wider the range is, the further apart these black bars are, the more price actions that are staying within that range, which means the longer amount of time you're providing liquidity, the longer amount of time your liquidity is making money for you. So don't just take into account like the impermanent loss risk and the high APRs of a tight range, but also keep in mind like, how long do I want this position open for? Do I want it a month? Do I want it a day? Do I want it a year? And the longer your time frame is, the more you need to bias your ranges to the wider, a wider range. The more you need to bias your LP ranges to a wider range. So we talked about V3 histograms a little bit in a couple videos ago, but I just kind of want to get that that point across again. These histograms represent the amount of liquidity that exists at given price ranges. And so this was back, when Hex was much higher in 2022, where it's between 3.6 cents and 4 cents here. That's where the price was more or less. So this is where the price is. And as there's more liquidity at a specific price, the higher the bars are, and the less liquidity at a certain price, the lower the bars are. And that's how you read these graphs.
So this is one thing traders use consistently all the time. We look at where the market maker may move it to grab liquidity. Okay. Now this is pretty tight range. You're not seeing a lot like a spread here with a lot of activity above and below. But, it's pretty cool to see, Hex stays pretty tight. It doesn't have, it's not a heavily traded asset in that sense. But it's pretty cool. 50K per bar, 3.2 to 3.6 cents. 5.7, 3.95 per bar. Interesting. Cool.
And so, as there's more, these bars are higher and there's more liquidity, price is going to move a lot slower through that range. And as there's lower liquidity, these bars are lower, price is going to move faster. And that makes sense because the higher bars means more liquidity, which means it takes more money to move price through that range. And the lower bars the less money is there, which makes it takes less money to move price through that range. So when you're providing liquidity and you're analyzing these bars, just understand the higher that there are, the more TVL there is, which means there's more competition at that range. But also, from a time frame perspective, there's a higher chance that price is going to trade within that range for a longer period of time. So if you see high bars, generally think lower APRs, but maybe a higher time frame that you're earning fees in. And the lower bars means less higher APR, but maybe the shorter amount of time you're going to be able to provide liquidity in that range, or the shorter amount of time that your money is going to be actively traded with, which means more time you're going to be earning fees. For the low bars, it's the opposite. The time spent within your LP range is going to be shorter because price is more volatile. Now, there can be more than one V3 pool for a given token. So for this, we have a hex ETH pair. We have two hex ETH pairs with different fee structures, 0.3% and 1%. And all that means is the 0.3% one, for every trade, 0.3% of the trade is being given to the LP providers, and the 1% of the trade is being given to the LP providers. But not only do we have two different pairs for hex and ETH, but we also have a different pair with hex and USDC. And so what you have to keep in mind when you're reading these histograms is that you need to take into account all of the pools that currently exist to get a good understanding of what's going on. If you're trying to analyze this for price movement, for example. So here, let's just take this purple bar, for example, for where price is at this specific given point in time. We have a lot of liquidity in this 0.3 hex ETH pair. We have a decent amount in this 1% pair, but there's no liquidity in this hex USDC pair right here. So most of the trades are going to be routed through this hex ETH pair, these two hex ETH pairs, and not much is going to be routed through this hex USDC pair. And so if you were just looking at this hex USDC pair, you might be like, oh my God, there's not much liquidity. Price is going to move so fast, but not really, because there's a lot of ETH that can be used as liquidity to be able to trade with. So you need to be able to kind of in your mind superimpose all of these liquidity graphs together to really understand like where liquidity is and how price might move relative to the different liquidity pools that exist. And this is also important when signing up your position, because you'll notice that most of the volume is going to be routed through this pair. So there's going to be a higher volume at this given range because there's more liquidity, but there's less competition in this hex USDC pair. So maybe you could be earning more fees if you provide hex USDC because there's less money there. So you'll be getting more of the action of people swapping hex for USDC or people buying hex with USDC. And so these are things you need to keep in mind when analyzing a specific coin for liquidity. You just need to keep in mind that there could be multiple pools at any given point in time. And when you're trying to analyze it for price action, you definitely need to take into account every single pool that exists. So that's it. Those are the data that you should keep in mind: TVL, volume, how long you want to keep your liquidity position open for. You need to keep into account how many histograms there are for that given point in time, and also be mindful of the bands that you're setting when you're doing a V3 position. If you master and really deeply understand all the concepts we talked about in this video, you'll be well equipped to start providing liquidity yourself across different scenarios. So it's like, hey, do I want a long-term passive income play? Do I want to make a quick flip of like 10, 20% in a day? Like whatever it is you're looking for, like with these metrics, you can decide how to set that position, how wide your ranges should be, how long you should expect to be in the money for, and which pairs to be providing liquidity on. So I hope you enjoyed that video. We're about halfway through the series, so I really, really hope you've gotten a lot of good, valuable information so far. If you want a little bit of extra help with providing liquidity, specifically with me, I do offer 15-minute calls that are absolutely free for anybody. So if you go to the description box below, you'll see that there is a link to this Calendly app. And if you click on any of these buttons, you can block off a 15-minute slot to talk about liquidity providing with me personally. These 15 minutes are completely for you to answer any questions that you might have about what we've talked about in this video series up to this video and in the coming videos in the next couple of days. So if you want some personalized help with your liquidity providing, this is how you do it. I've really enjoyed these conversations with the people who watch my videos. And so I hope to see you live in a free 15-minute call. You can get a lot out of these if you have a question.
Dude, how amazing is our community? How amazing is our community? We have like the most generous, talented, smart people of any community. Like CryptoSloth, this is awesome, man. What a great show. I might take him up on that and chat with him for a little bit about liquidity. Learn some more, right? Fast Abdul sent you under threat of jiu-jitsu. Well, supposedly he's supposed to fight Ian soon, so we're going to find out what his jiu-jitsu is like, how good he is. You heard about that, right? We're doing a cage match. Ian Heinisch and Fast Abdul. In all fairness, it might have been Pedro's idea. But I think that, from what I could tell, Fast Abdul was very excited about it. Where is he? All right, let's go to number 5. You guys have any questions at all? Everybody smash the like button and go smash the like button on Sloth's channel as well. Okay, next one. We're going to number 5, right? Liquidity providing lesson number 5, routing. All right. Moondog, what's happening?
What's up, everybody? Welcome to lesson number 5.
Oh, my computer. If you guys notice it gets sticky, let me know. The internet is being a little squirrely tonight. Let's double check this BTC really quick. 110. Okay, it's just hanging out. It's just hanging out. Okay. But it did, what did it do? It did tap 112? Yeah, it did, huh? Okay. Yo, KD, what's happening? All right, we'll come back.
What's up, everybody? Welcome to lesson number 5 in my liquidity providing series. Today, we're going to be talking about routing. Yesterday, we talked a lot about the different metrics on a permanent loss, and routing is an important concept to layer on top of that because this is how money flows when an order is executed on a DEX or really more specifically a DEX aggregator. And really what routing is like I said, it's just the way that money flows when an order is executed so that you, the person executing the trade, gets the most bang for your buck, or you get the maximum amount of efficiency when executing your order when there are multiple liquidity pools. Now, if you'll remember, in the last video, I talked about how there are multiple liquidity pools for a specific token that can be with the same pair or even with different pairs. And what routing does is make sure it hits all of those different pools so that you, at the end of the day, maintain as much value as possible relative to the amount of liquidity exists with that specific pool. Let's dive in. All right. So like I said before, there can be multiple liquidity pools for a specific token. And these can exist across multiple DEXs. Now, before I get into that, let's see. Each of these DEXs, say we have 4 different DEXs that have liquidity between HEX and USDC. DEX 1 has a low amount of liquidity. DEX 2 has a medium amount. DEX 3 also has a low amount, and DEX 4 has a lot. Now, if without routing, what you would want to do is go across all of the DEXs, all of the liquidity pools, and see which one has the most amount of liquidity so that you experience the least amount of slippage. And all slippage is the difference between what you were trying to get with your trade and what you actually got. So just because you put $1,000 in, $1,000 buy-in, doesn't necessarily mean you're getting $1,000. If there's low liquidity, you may only get $950 out, because there just isn't enough liquidity at that specific range to service all 1,000 of your dollars. The price is going up as you're buying, so much so that you're losing $50. And that $50 would be considered slippage in this specific example. So without routing, what you would need to do is you would need to take your HEX to the specific DEX that has the most liquidity and execute that swap there. Now, that's pretty hard, especially for a lot of users that don't really know what's going on or don't really understand.
Okay, so in all fairness, now he's getting, this is pretty advanced stuff. All right, this is advanced for me, for anybody. I mean, it's doable. I understand what's going on, but if you feel lost at all, or we are getting in the weeds. So don't feel bad. You know, just listen, pick up what you can, ask any questions. I think in some ways, just getting familiar with these concepts are going to help you understand what's happening. And it's good to do it now, as opposed to, let's say, once we start breaking and we're moving up, your emotions are going to take over. And right now is a good time to just understand these concepts. So they're kind of in the back of your head, and you'll understand how the bigger players are going to move things and why it's moving the way it is.
And all of these concepts, maybe they haven't watched this liquidity providing series to understand that there are different pools, and then swapping on each DEX isn't the same. And so they might be going to DEX 1 or DEX 3 and getting a worse deal, when on DEX 4 or DEX 2, they could be getting a really, really good deal. Well, what routing does is it's going to send your coins across all of these pools to get the most amount of liquidity. So with routing, the best tool that you have is an aggregator. And what an aggregator does is it splits your order up across all of the DEXs that exist so that you get the best order execution. So your HEX tokens that you're selling go into the aggregator, and what it's going to do is it's going to split up that order across all the DEXs proportionally to the amount of liquidity that exists within each DEX. So first, it's going to take those coins and the aggregator is going to take your hex coins and it's going to run as many as it can through DEX number 4 first, so that you get the most bang for your buck. Maybe say for $1,000, it's $800 goes to DEX 4, and you get that $800 of USDC out. Then it might take $100, put it through DEX 2, and then you'll get $100 out here, and then split that last $100 50-50 between DEX 3 and DEX 1. So that now, instead of all $1,000 going through DEX 4 and maybe only get $950 out, by splitting it across all 4 of these DEXs and hitting all of these LP pools, you'll probably get like $999 and maybe even the full $1,000 out from this single order. This is extremely important because it allows people to trade across all DEXs, and it allows them to get the best order execution. So
chat, help us out. Put in the chat, what are some of your favorite DEX aggregators on PulseChain, or just even in general in crypto? Because the aggregator, just so you guys understand, you're not doing this. The aggregator is doing all this for you. But just list in there some of the favorite ones you guys have, some of the ones you've used before, and some of the ones that maybe also list the ones you think are easy to use. So for people that is maybe this is their first time. And I think PulseX also does a version of this as well, right? Though limited, it does do some, to some extent, some aggregating. But you guys will have to correct me on that if I'm wrong.
So that you're not just losing money trading in and out of your coins. This is a really important concept when you're swapping coins yourself, because you want to be able to go to a DEX aggregator that hits as many pools as possible. Here on PulseChain, we have 2 really awesome DEX aggregators, Piteous and Omnis. And so the link for those 2 DEX aggregators will be in the description below for you to use. Make sure you bookmark those pages so that you can always go to them when doing your swap. So I would always go to a DEX aggregator first whenever you're trying to do a swap, especially with a larger amount of money that you have. And so this is just kind of another visual on exactly how routing works. And this is with from stable to stable pair. So say you take 80 million of USDT, and standard router, you would take that USDT, swap it to ETH, and the ETH to USDC. But because you're only hitting one pool, this trade is losing 62.9% of its value. So you had 80 million, but now you only have 29.5 million. With a router, it splits up that USDT across as many pools as possible, so that at the end of the day, you're losing a lot here. You're losing $900,000, which is a big deal, but it's not as bad as losing tens of millions of dollars over this initial route. So like when a routing is happening, it's just.
And if you're wondering, would anybody be that dumb to do this? Yes, it has literally happened just this year. Famously, there's been a few big transactions where people just did it in a haste and lost millions. So people still mess this up all the time. And your bags may get really massive. Like, you may not be thinking some of this might be important for you now, but you may be shocked. You may have bags that are, $100,000, $1 million suddenly, and you might need to move them around. So you need to understand and move slow and patiently, so that, because it'll just eat your coins. If you do it wrong, it'll eat them up. Like you could literally go from, a bag of, that's not even 80 million. You could have an $800,000 bag and mess it up and only end up with 500,000 after your transactions, and you just lost 300,000 because you did everything that you shouldn't have done.
Getting you better order execution. This example right here is from Piteous. And this is showing an active trade trying to swap PHEX over for USDC and all of the different pools that it's hitting. So it's taking 43% of this trade, going to all the different hex pulse pools that exist on PulseX V1, PHUX, and PulseX V2, doing those swaps and then swapping that pulse for USDC. Then it's hitting up another hex pulse pool, going through PulseX V1, PHUX, and 9inch. So these are probably a different fee tier in this example. Not a different. In this example, it's taking that pulse and then going to the USDT and then swapping the USDT for USDC on PHUX. And then this one is doing the same thing, but now it's going through the Coast pool over here on PHUX, and then going through Coast USDC and then getting your USDC. So routing can be really complicated. It can be going through multiple pools, multiple DEXs all at once, but all this is happening so that you get the most bang for your buck whenever you're doing a swap. So make sure that you're going to a DEX aggregator when doing your swaps. And this is really important for when you're providing liquidity, because the more routing that occurs across DEXs, the higher percentage, there's a higher percentage chance that your pool that you're providing liquidity in is being hit. So more routing is better for liquidity providing because your pool is going to be used more often, which means you're earning more fees. Now, routing is a fairly simple concept, and that's why this video is over already. So that's lesson number 5 in our liquidity providing series, and that's routing. And all it means is that orders are being split up and hitting as many pools as possible so that the person executing the trade gets the most bang for their buck. They experience the less amount of slippage, and there's more order efficiency. And for the liquidity provider, this is really great, because if you're in a liquidity pool, maybe in a more exotic DEX and a more exotic pair, your pools can still be hit without the person doing the trade having to go specifically to your LP pool to execute their swap. So I hope you enjoyed that lesson. Don't forget, free 15-minute calls down in the description below. And in our next video tomorrow, we're going to be talking about a really, really cool concept, which is buying and selling with liquidity.
Awesome. Everybody smash the like button. Also, go smash CryptoSloth's like buttons. This is he put in a massive amount of work here. It's very cool. Internet Money does this. Yeah, cool. Good to know. Good stuff. All right, let's check. Let me go check this chart really quick. We'll come right back. We'll start the next video. All right, where are we at? Okay, so we're still moving our way up. We're at 111. You know, we tapped this 112. What is going on over here? Hang on a second. Yeah, why not? Volume has vanished there. It's kind of weird. Let's go to the 12-hour really quick. Let's see what's going on here. I definitely think we're going to get up here to the 113 and a half, 114, 115. We're going to get up in here. I do think we're going to get there for sure. Looking at this, it's definitely more juice. We're looking good. All right, let me see what ETH's doing really quick. Let's go 4-hour really quick. Man, right, and you're just smacked by that resistance. Really smacked right there. Yeah, we're at one of those spots, so let's see what happens. On 3, let me see the weekly really quick. What's the date? It's the 9th. Yeah, I think timing-wise, too, I still could foresee this getting fulfilled, my little pullback thing. Because maybe a lot of people will be convinced it's all about to fall apart. But maybe we just get a juicy pullback before we really take off there. All right, number 6. PulseX has the biggest amount of liquidity. I'd connect Beach Whale. Okay, Internet Money, yeah. Moondog. You can also eat slippage setting up a fresh LP pair. Not as common. Things get more established. But I paid for a few lessons trying to set up maxi deci liquidity on new dexes. You can eat slippage setting up a fresh LP pair. You can eat slippage anytime, but why setting up an LP pair? Like if no one's done it yet, I don't know. Moondog, 100%. It's always a really good idea to start LP small at first. Yeah, that's it. That's you don't need to get too into the weeds. Just start really small. And with PulseChain, the fees are so low, you can do that. You can just do like $10, $50, move up to 100, and then maybe you can go up to 500 or 1,000, whatever you're doing. But yeah, just start small. The fees are really small. Just be patient. Take notes. I always take notes when I'm doing liquidity. I got a little notebook, a lot of little math in there. You can get turned around pretty easily with liquidity. Okay, the amount of tokens, the price, what your ratio is. So you need to have clear notes going on. Don't just cowboy this. All right, let's start number 6. Let's see where we at. We got 6. Liquidity providing lesson, buying and selling with LP. And then Hart's Law, crypto endgame. Ooh, interesting. We'll try to at least get to 2 more videos. Oh, we're at 7. We're at Hart's Law. Nice. Liquidity is such a dry topic, crispy. I can tell from the views. We've been doing liquidity from yesterday. You can tell people are like, yeah, I don't need to learn that. But really, I think it's important to at least get familiar, even if you know, okay, I'm never going to do it. To understand these concepts and what's happening behind the scenes, I think is really important.
What's up, everybody? Welcome to lesson number 7 in my liquidity providing series. And today we're talking about Hart.
Oh, by the way, anybody who wants to join the stream, I totally forgot to put the link in. I know it's like liquidity. It's not the most exciting topic, but if anybody does want to join, I'll just throw the link in the chat. Telegram link is at the top of the screen. You can see it up there. It's at the top. And then also in the description, if you guys don't know what the Telegram is, let's see. So I'll drop it in here. If anybody wants to join. Get Stefan Burns on the stream. I was just talking to him on X. Man, he's busy. When I first streamed with him, he was at, I think he had just broken 100K. He's on his way to 400,000 subscribers right now. He's quite busy right now. But we have touched base a little bit on X with the markets and what have you. But I'll try to get him on for sure. He's amazing. Very interesting gentleman. If you guys are wondering who that is, Stephen Burns is a geophysicist and does charts and is really into numerology, and it's very interesting stuff that he brings together. And we did some deep dives, or in my Conversations on Chain series, we did some things about pdai, and he did the numerology for pdai, and he nailed it to a T because it said it was going to crash and blah, blah, blah. And then lo and behold, a month later, pdai crashed, everything. Yeah, it's really amazing what this guy brings together. I thought it was funny. LP, very important subject. So yeah, I'll try to get him on for sure. For the best practice subs. Cool. All right, let's start. Number 7. Hart's Law.
This is a really fun topic, and I think it's a really important one to understand, especially when you're talking about really diverse ecosystems that have many tokens, and all of those tokens are paired together in liquidity. Hart's Law kind of explains why, when you have a lot of tokens paired together in liquidity, why they are moving together, or at least it's describing the fact that they are moving together. Yesterday, we talked about buying and selling with LP. So today we're changing the topics a little bit, but it's gonna really help you understand how liquidity functions and how price responds, depending on the amount of liquidity that exists, both total liquidity, but also the diversity of pools that exist. We're going to be taking concepts from V2, V3, and the routing lesson. So make sure you watch those before you watch this one. Let's dive in. So most simply put, Hart's Law states that coins paired to liquidity move together proportional to the amount of bonded liquidity between the assets. Even more simply put, the more liquidity there is between two tokens, the more likely their price is going to move together. And let's outline exactly why that happens. So here we have the same example we've been talking about for the entire series, and it's buying Hex, and there's a Hex USDC pool. So the USDC is going to be put into this LP pool, and Hex is going to be taken out. But what if we have a low amount of liquidity in this Hex USDC pool, and somebody's going to experience a high amount of slippage? That may deter people from participating in the market. However, like we said in the routing series, and like we said in the V3, the V2 V3 series, there can be more than one liquidity pool that exists at one time. There isn't just one singular pool that every single order gets routed through. So what if
Paul, what's happening, brother?
Hex and
Crypto Factors
Hedron
in the
were paired
house.
in a liquidity pool together that had a lot more liquidity than the Hex USDC pair? And that's what these graphs are representing. Low liquidity in Hex USDC, high liquidity in Hex Hedron. And so what's going to happen is exactly what we talked about in the routing episode. The router is going to take our USDC and it's going to try to run it through this Hex Hedron pair, but first it needs to get Hedron. So the USDC is deposited in this pool, the Hedron is pulled out, and then the Hedron is put into this pool, and then the Hex is taken out. So finally, all of the coins that we wanted have been put into the market, and we have gotten out the most amount of Hex possible based on the liquidity that exists. Now, what's happening here is that the Hex-Hedron ratio increases. So Hex is getting more valuable relative to Hedron, but USDC is put into the Hedron pool. So Hedron is actually pumping at the same time. So we see these two coins paired in liquidity, Hex and Hedron, but when a buy order comes through that's large enough that routing needs to occur, the Hedron coin is being pumped. And that's because it's being paired with this Hedron in this liquidity pool right here with a lot of liquidity. And so because there's a lot of liquidity there, the likelihood that orders are going to be routed through that pair and putting USDC into the Hedron pool increases. So Hedron is getting pumped when Hex is being bought. Now, here's a graph that kind of shows that with the Uniswap V2 liquidity X times Y equals K chart. If you remember that from probably the second video in the series. And with the Hex USDC pool, we can see that there may be a very little amount of Hex in there. But in the Hex Hedron pool, we see a lot of liquidity or a lot of Hex tokens in that pool. And that's why the orders are being routed through it. But that brings up a question. If USDC is being put into the Hex, into the Hedron USDC pair and not into the Hex pair, well, isn't that pulling buy pressure away from Hex? Because not all the USDC isn't being put into the Hex USDC pool. And the answer is yes, but not really. Like kind of, but not really. So yes, USDC is being put into the Hedron pool and not into the Hex pool, but the Hex to Hedron ratio is increasing because Hex is leaving the Hex to Hedron pool, which means the value of Hex relative to Hedron has increased. And so even though the price of Hedron has increased, Hex is increasing relative to that asset that is increasing in dollar value price. Another really important thing to note here is that Hex is the only thing being taken off the market. The same number of Hedron tokens are still in the LP pools, and there's less Hex on the market. So even though USDC is being put into the Hedron pool and Hedron is being bought from money that's trying to buy Hex, Hex is the only thing that's being removed from the market. What's happening with Hedron is just being moved from one pool to the other, basically in like it's kind of like accounting. It's just making sure that Hedron is getting put in the right place so that the person executing the order gets the best deal possible. And so the main thing that matters is the amount of Hex across all pools. All else is balancing. And so buy pressure, no matter how it's routed, always resorts in the desired coin being more scarce. So at the end of the day, the majority, if not all of the value through the buys is going to the token that is trying to be bought, because the maximum amount of money is being put into the main liquidity pool, in this case Hex USDC, and the routing of the other pool is still pumping Hex just relative to the coins that the money is being routed into first. In this case, it's pumping relative to Hedron, which is getting a part of the buy pressure that's coming in for Hex.
Everybody, I just had a guess. Somebody jumped in the green room. I was like, wait, am I on the show? You weren't on the show yet, actually. Your audio would have been, but I was asked if guests want to jump on the show first before I hit the button. But everybody understand what's going on? Look, these are the last few videos of the series. It's getting quite advanced, but this is Hart's Law. Pretty much what that means is a lot of these tokens that have been dormant for a long time, they've just been hanging out. When the core tokens move, these other tokens are going to fly as well. All right. I'm not saying go speculate on them. I'm just saying that's it. They're all connected. And I feel like maybe this is a more complicated way to show this point, but let's see where else it goes. But if you guys have any questions, you can throw them out. Starting LP pair small is a friendly advice from a stranger. Yeah. My dog, don't be a Lunacy Point is not a financial advisor.
Now, that sets up a situation where the liquidity pools are not going to be
33 likes on the show, pups. That's awesome.
Coherent with each other. And what I mean by that is there's like an arbitrage opportunity. So if the hedron has pumped a little bit and hex has pumped a little bit, and then the hex to hedron ratio has pumped even more, well, there might be a situation where there's an overvaluation of hex to hedron relative to the liquidity pools that exist. So this is just a very, very crude example to show you how it works. This will get the concept across, but it's not like exactly how things are working under the hood. So we have hex is worth $1 and hedron is worth $1 here. Both are worth $1, but hex is worth 2 hedrons. So in this pool, hex is actually worth $2. So what's going to happen to rebalance these pools is that somebody's going to take some USDC, buy some hex, take that hex, swap it for hedron, and now they're getting 2 hedron at this 1-to-2 rate, and then they're going to swap that into the hedron USDC pool, and they're going to get 2 USDC tokens out from that arbitrage opportunity. So they put in 1 USDC and they get 2 out with a profit of 1 USDC. And if you remember over here, hedron is pumping, hex is pumping relative to USDC, but hex is also going to continue to pump relative to hedron. And so if the volume of that buy is large enough, there's going to be a discrepancy in prices between those 3 coins. And so people either individually or arbitrage bots are going to come back and make sure all of those ratios are fixed. And the amount of inefficiency or the amount of discrepancy between pools is going to equate to the amount of value that can be extracted from that arbitrage opportunity. Now, when all of these trades go through, basically all of the ratios are going to work. Hex is going to...
What's up, Fast Abdul? Welcome to the show. How you doing?
Good. How are you, Wolf?
Doing good.
I just saw the hedron talk here, and I thought I'd jump in. I think it's this data is really good, but like the opportunity he's talking about is currently not available until we see some changes with the ICOSA to hex ratio.
Yeah, and I did express this is pretty complicated stuff, and I do think it's really complicated. May not be the best way to explain Hart's law either, but yeah, we can go into it if you guys have
There's
questions.
definitely the potential here for like cool arbitrages in the future. With the hedron, with the ICOSA, like if Alex does his V2 thing that he's been talking about, this was a huge money maker for me, and it encouraged people to make tons of hex stakes. So
really?
Yeah, definitely worth learning. Okay. Hart's law is king.
Well, the math is there, but it was definitely advanced for a lot of people, and if they can market it and make it easy to digest for everybody, it'll be great, because the math is great. The math is there. The potential is there.
Cool. And Sloth's good at the math too.
Sloth knows the math. Yeah. Sorry, I had to make you tiny there, buddy, for presentation. Yeah. I'll continue, but and then we can go back and maybe you can also explain it after we're done in a little bit simpler way too. We can because it is hard to law. So
of course. Increase in value, going to go up in price. Hedron is going to go down in price because it's being bought. So there's more hedron in the pool, less hex in the pool. And then now hex is going to dump a little bit because hex is going to be put into the pool and hedron is being taken out of the pool. And so basically this is just a long way of saying, even if the routing, if the order is big enough through the routing, then some of the tokens may be mispriced relative to the other tokens across all the liquidity pools, and arbitrage just comes in to equilibrate them to make sure all of the ratios are the same. At the end of this, what ends up happening, just like we talked about before, is that hex pumps either way, and hedron gets kind of a back. What's the word I'm looking for? Hedron kind of gets tagged along for the ride because of the routing. Which is great for hedron, and it's great for hex because there was deeper liquidity and people can buy more hex tokens because of that deepened liquidity. So to balance the USDC pools, new USDC is put into the hex USDC pool. Several trades happen that end up with USDC pulled out of the hedron pool, but hex is pumped in the process to have the hex USDC pool reflect the value of the hex to hedron pool. The R profits by removing USDC from the hedron USDC pool. Hex pumps, hedron dumps, and the ratio adjusts until they equilibrate in the middle somewhere. So that's it. That's what Hart's Law is. That's kind of like how it works when we're incorporating the concept of routing into order execution, and why the price of two different coins can move together even if the market is only buying one coin. So you'll hear a lot in the ecosystem of like Hart's Law, bonded liquidity, and why it's so important. And this is kind of like the nuts and bolts on why it's important, is because when there's deep liquidity between two pairs, DEX aggregators, or even the DEX itself, is going to route the order through those other pairs, popping those other coins in the process, but ultimately pulling out the main coin that wanted to be purchased in the first place. I hope you enjoyed this lesson, lesson number 7 on Hart's Law. We're getting really close to the end of the series, but next time we are going to talk about Balancer, which is a completely different style of DEX than Uniswap V2 or V3, and we have our own Balancer for PHUX on PulseChain. So that's going to be really important for you guys to understand, as it's another opportunity to provide liquidity and earn a little extra income. I hope you enjoyed this lesson. Hit the like and subscribe if you haven't already. Free 15-minute calls down in the description below. I hope you enjoyed it, and I'll see you in the next episode. Peace.
Thanks, Sloth. Everybody go smash the like for Sloth, and then smash the like on this video too. Of course. Fast.
Yeah, no, it's good. It's great data. And you know, Wolf, I misspoke before when I said like, oh, this isn't the opportunity. I saw Hedron on the screen, and I just got off another stream. He was just talking about Hart's Law and using Hedron as the equivalent. Yeah. Everything he said is completely valid. You know, Hex would pull up the things that it's tied to by liquidity. It totally makes sense.
Can you re-explain it for everyone in the most simplest way you can?
Sure.
I think using the Hedron did make it more complex, so maybe we could use something else too, because like you're saying, it's not possible anyway. We can use another example.
We can simplify it to using anything. So like we could use apples and oranges, right?
Let's
so
use
like
apples and oranges.
Apples and oranges. So if you have like a pool that has 10 apples and 10 oranges, right? And one apple is worth one orange, right? Then the price of oranges doubles, right? It's going to pull up the price of apples. That pool is standalone in crypto, right? Depending what else it's connected to. But like if the price of oranges doubles, right? If that's the only pool, is that one pool of apples and oranges, the price of apples will double too, right? Because 10 apples is worth 10 oranges. Right. So, and of course, there's larger variables. Like there might be pools with apples and pears are worth less, and so on and so forth. But like, you know, if the price of pears doesn't double, right, but the price of apples doubles, then the apples will then pull up the pears. And I think that's what we're going to see on the Pulse chain is, you know, Pulse is the oranges. When the price of oranges double, this isn't a shout out to the Tang Gang, by the way, then, you know, the price of apples will get pulled up along with it. So, and then that will pull up the price of pears, and everything rises together because of Hart's Law. Like these assets are tied intrinsically by those liquidity pools.
Okay. Yeah, Moondog says, explain it to me like I'm a moontard, por favor, Camel.
Yeah, price of Pulse goes up, good. Because Pulse is the most liquid thing that's tied. Like very few things in the Pulse chain ecosystem are more than one step away from Pulse, right? Like you're like, okay, this is, you know, something might be not paired to Pulse, but the thing that it's paired to is likely paired to Pulse somewhere. And most assets are paired directly to Pulse. So, you know, the Hart's Law very much applies to the Pulse chain in a huge way. Pulse is the main thing that if it went up, it pulls everything up with it. So yeah, tying other coins that could end up being leveraged on Pulse, leveraged on Hex, to Hex, Pulse, PulseX, Inc., you know, those richer hardcore assets, the ones that sack bag that'll be worth $1 billion when ETH hits 6,000, like the ones that they could buy, as not that we should expect that, but it doesn't seem impossible to me. That's where Hart's Law is going to pay off, like literally in multiples, right? So when we get a 10x Pulse, we get a 10x Pulse chain. It'll be huge.
So if Pulse 10x's, based on what you've seen, what's going to move the most just out of Hart's Law?
Well, realistically, the things that are most tied to that token, right, that have the largest amount of liquidity or percentage of their liquidity tied to that token are going to move the most, right? So, and that have the least dead weight attached to them in terms of other tokens that aren't equally attached to the price of Pulse, for example, right? So if you had like token A was 50%, 50-50 with Pulse was its only liquidity. But somebody else, but like token B could have 50-50 with Pulse in one pool, but another pool, it could be against another token that was not as tied to Pulse, that would not get pulled up as much, and that would pull token B down compared to token A that was only tied against Pulse. So, it's very much for founders and whales, like liquidity providers. Right now, it's very much an option to pick, the core coins that you want to pair with that you think are going to be winners is going to help your community. If the Pulse chain, this isn't financial advice, but if the Pulse chain goes up and those core coins go up, it's going to drag other coins up with it. What won't get dragged up in price is going to be USDC, right? Like in Pulse's in CryptoSloth's image there, like he's got Hex paired against USDC. When the price of Hex goes to $5, if that were to happen, like USDC is going to stay right about $1. Now, technically on the Pulse chain, since it's a limited ecosystem, you will see the price of USDC get pulled up, but it will be bridged out and redeemed somewhere else and swapped for other stable coins. It'll get pulled back down very quickly. But if there was a huge pump, like let's say Richard Hart came in and he pumped Hex, like dropped, whatever, $20 million into it in one giant green candle, you'd probably see like a $2 USDC or whatever the biggest DAI, I think is the biggest pairing for stablecoins. You'd see DAI go up to $1.50 or $2
really?
On the Pulse chain. Oh yeah, like it's just liquidity. It's just like pairing Hex against Pulse, right? There's no automatic mechanism that knocks that down immediately on the Pulse chain. It's a bridged asset, right? So there will be arbitrage options with stablecoins.
Really?
So yeah, but it won't, like it will return to $1 because there's peg mechanisms not on Pulse chain but on Ethereum and other places where that could happen. So, but like we see that with other stable coins that are paired to volatile assets, right? Just it's on Ethereum, the pools are so big that if Ethereum went to $5,000, like, yeah, you might see USDC bump to $1 and a penny. But like if you saw Pulse do a 10x in a day, you would see DAI do like a 2x or something. Except for it would get arbed out so fast that like it wouldn't stick around, right? Because that's that's just money on the table. If you're holding DAI, right? It's just how it works, right? The math is exactly the same for stable coins, unless they have an arbitrage mechanism on chain. So it has to be on Pulse chain where that could automatically be arbed out. But somebody makes money when that stuff happens, I guarantee you.
Oh yeah, definitely. When volatility comes, there's going to be a lot of plays to make, for sure. It's going to be crazy. What are you providing liquidity?
Oh yeah, no, I'm providing all kinds of liquidity all over the place.
Are you?
Yeah.
Is
there my main thing, like as far as is farming stuff, right? And farming by default is liquidity. So not all the time, but almost all the time. So I'm very familiar with the things that Sloth talks about, V2, V3, and he mentioned his next presentation will be on Balancer, and Fux.io is Balancer. I'm kind of on top of that one, so. That'll be more complicated, but that's sort of the high end of liquidity providing is liquidity pools that can have up to 8 assets in them that can trade back and forth.
Yeah, maybe we'll do that on the next show. We'll start fresh with that one, and because I think that was going to be a big one, a lot of questions.
Yeah, that's a bigger conversation for sure.
We'll make sure you're here.
But there's tons of money to be made in liquidity for sure on the Pulse chain and on Ethereum and other chains, right? Like. Mm-hmm. But the skill is the same, which is the beauty of what Sloth teaches, is that thank you. Is when you get when you get to know how to use V2, V3, Balancer on the Pulse chain, you know how to do it on Ethereum, on Polygon, all the chains, all the EVMs work the same. So this knowledge is gold.
So what are some of your favorite, if any of them you want to talk about? I mean, obviously you don't have to, whatever is you're comfortable with talking about that you like right now, or that liquidity pools that you like, or
I don't know, like, and this is kind of tooting my own horn, so you can take it with a grain of salt, but right now let me just check the numbers. So right now on 2Fux, which is built on top of the Fux exchange, there's one farm against stable coins, so just stables to stables. And I'm not telling people that this is the time to be in stables, but when it is time, stuff like this is going to be gold. So we have 100% APR on stable coins, pairing in the RH stable stack pool, pairing USDL, INCD, HexDC, PXDC, and DAI from Ethereum against each other. So you have
Okay.
5 assets. 4 of them are liquidity forks on PulseChain, which adds in all kinds of strategies, because that could mean for those 4 Richard Hart assets represented by these liquidity forks, you didn't sell your bags. You just borrowed against your bags to get these stable coins so that you could make 100% APR with no impermanent loss on stables to stables. And then you still have your Pulse, your Hex, your Ink, and your PulseX.
So this is pretty
right?
advanced
So that's
stuff.
right
So
now.
for-
I think that's
For that to work, you have to stack all of
Yeah.
those, right? That's how that works, right? Yeah. So that's pretty interesting.
it's you like to do it right.
Yeah.
You would have to have all those assets. So
Yeah.
like the 4 core tokens, and then you'd have to, in my opinion, not sell them. Instead, take a loan against them with all 4 of these liquidity forks. Then pair it against some DAI from Ethereum. So you'd be some into cash, so to speak, that you had to swap for. And then not sell your Richard Hart core tokens. Instead, take a loan against them, make 100% APR with no impermanent loss on stable coins. And when those coins pump, right? So let's say you borrowed $10,000 just for a number, but you still have the right to those assets. You just have to pay back the $10,000. When those coins 10x, you still only, and your $10,000 that you whatever your borrowed against is worth 10x what it is now. You just still have to pay back $10,000 to get back your whatever it was, 200,000 value in future tokens, right?
Yeah.
So it's a little bit advanced. I don't want anybody to rush out there and start pressing buttons, but it's totally on the table. Is be in stables without selling your crypto and make 100% APR. PulseChain has this.
Wow, this is amazing. Okay, so we're definitely going to start when we do the continuation on the sloth videos. I want to start with this. We'll make sure you're here. We'll find out when you're available because we can get into this one. It sounds pretty cool. What about for beginners, somebody listening right now, and they're like, okay, look, where should I go to just start learning? Where should you point somebody to look, start here? Where would you direct them to start learning this liquidity
I
stuff?
think the easiest place for most people to start liquidity providing is going to be with V2, right? So PulseX V2 being the most trusted, most known on PulseChain.
I have some liquidity
So
there.
you could enter the you could enter the PulseX farms. Now that they're not paying very much right now, so that's it's kind of learning. And the farms are on, it's V2 liquidity, but it's on PulseX V1 is where those farms exist, meaning you're not making swap fees. So I really can't recommend it as far as the amount of farming income you'd make right now. I think the highest ones are 10, 11%, and those have stables, which are going to be a huge impermanent loss thing. The biggest thing I could recommend to people before they try this, learn what impermanent loss is, right? If you don't know what impermanent loss is, which is when one asset goes up quicker than the other and you end up holding more of the lower valued asset. I'm sure Sloth went over that.
Lesson number 4,
that's called impermanent loss.
No.
Yeah. And your loss is only permanent once you pull the liquidity. So if it goes up and it comes back down and then they're on equal level with each other and you made fees of some type in between, then you won. But if it goes up, you pull it out, right? You have less of the asset that's worth more of the asset that's worth less. You've now solidified that loss, right? So, but there's definitely assets out there that are going to move up very closely together, right? Pulse and PulseX, for example, is, and that pays relatively low APR there, but there are other options, right? So on 2Fucks, there's some options for no impermanent loss or very low impermanent loss pools. They're not usually not in the 100% range. That one's kind of an anomaly, but there's, decent 20, 30, 50% things. There's also the new emit protocol, and it's been around for quite a while, but it's known team, emit.farms. People should do their own homework there. You're depositing an LP token into another protocol. So that's your contract risk is going somewhere else, right? But it's the same LP token you would have deposited in the PulseX farms. And it has the same farms that were on PulseX. They just pay you more via that protocol. So, but again, there's, the more steps you take, the more risk there is. You have to understand, you want to research these teams, you want to read their audits, right? You want to, you want to do all the things to make sure that this is safe.
But where
But
would
like,
you?
I think that one's not a bad opportunity right now for simple farming. Emit.farms seems to have, yeah, like decent APRs and there are some low and permanent loss pairs, in my opinion, but there are some pairs that probably are going to be much higher. So yeah, do your homework, kids.
So just to give somebody, like, let's just stay with PulseX V2, so everybody knows that. Where would you
Sure.
tell them to start? Like somebody
Okay.
just wants to learn, they got $50. Where should they start? Where would you just recommend them do this?
$50.
Where should they start?
On PulseX,
Yeah.
they now have the stable swap on there, right? So
Yeah.
it's
there.
yeah, I haven't looked at it for a couple days, but basically you could put in $50 worth of any one of the 3 stable coins that are on there, which include USDC, DAI, and USDT. I'm pretty sure from Ethereum, and it's a 3 asset pool. It's similar to what we'll talk about later with Balancer and Fox, but it's much simpler to get into. And I think there's a decent APR there. I'm just looking it up right now. And that you're just in stables, right? So it's like you're not going to have any impermanent loss, right? Because people are swapping stables for stables inside the pair that you put up. You're going to make the APR from the swaps as well as the APR from the actually that one's just APR from the swaps. That's all you're making. It's not a farming thing. So I see you got PulseX up there. What kind of numbers we got?
Yeah, this is
So
just
yeah,
the
again,
farms
those
right now. Yeah, basic.
Yeah, those stables are the only ones that are paying well, but that's your impermanent loss. You pair a die against Pulse to make 12%. Pulse doubles, right, in price. You lose half that double when that happens.
Yeah,
right.
it may
So
not be the best time in case we just completely break out and moon. You're gonna lose your stack very quick.
If you think it's going to go sideways, right? You think for like whatever period of time Pulse is going to go sideways, then this could be a great move. Or if you're trying to cash out a little bit, this could be a great move. Be like, over the next 3 months, I want to move out of a percentage of my Pulse. By default, as the price of Pulse goes up, which I think it will, you're losing some Pulse and you're gaining DAI, right?
Yeah.
So like it's kind of a slow cash out move where you make some farming revenue in the form of ink while you do that.
Yeah, 100%. And that's a strategy that you would use. If you think we're getting close to top, you can just set it up and it'll slowly sell your asset into stables and you can also earn fees. And Azek, I hope I'm pronouncing your name correctly, by the way, but you're exactly right. And if you have a big bag, for a lot of people, this is just passive income. It's a great way to just chill and not take too much risk, right? LP providing. It's a science. You can get very good at it and become very wealthy doing it, but you do have to be smart.
What do you think, Wolf, on that page? What's the lowest impermanent loss pair on average over the course of, let's say 2-3 months?
Oh, I think PulseX.
Yeah.
I
and
think that's
and
like
hexagons, PulseXins are smart, right? And that's why that one pays the least.
Yeah. I think that's your most conservative move. Ink Pulse.
Oh, in this case with that farm, and I'm sorry, my eyes are deceiving me here. What does it say for the APR on PulseX?
0.5. Half a
0.5. And that's just farming revenue in ink, right? You're not getting swap fees because the farms are set on PulseX V1, which is fine because that means the V1s burn more PulseX, for the community, not for the individual player. You could be better off just doing an LP position on V2, not in the farms right now, where you're making fees. So you get a piece of the swap fees whenever somebody swaps between PulseX and Pulse. That could actually pay more than being in that farm and earning ink at the moment.
Right. So these are some of the top pools right now.
There we go. And what kind of APRs are we talking about?
Well, it doesn't tell us anything.
And let me see what data I can pull here.
Transactions. Impermanent loss is the boogeyman, which is staying out of the way. Hocus pocus. Also, Pops, listen, if you guys also have there, I think Crypto Coffee is a video as well. And if you guys have another video, if you think of one, it can also be outside the community. We can also watch something else, because I'll tell you what, this is going to help you guys understand the market. Okay. Even if you're not going to do it. So I think I want to do another day where I do it. I know views are down. Not everyone's interested, but trust me, this is the kind of thing that's actually going to prep you for the bull run. This is going to keep your mind cool, because see, when you have an understanding of like what's going on, you're less like starry eyed when the stuff pumps. You get that there's stuff happening in the background. So if you guys can think of anybody else you want to see, we'll do another day where we watch somebody else's take on liquidity, because I think it's a great thing to learn right now as we get close to bull run. It's just going to keep you cool minded. It really will. You know, whenever you know anything, like how things work, you're just more chill, you're more relaxed. And that's a big part of going into the bull run, because, you know, we don't talk a lot about the psychology, but one of the reasons I took off summer a little bit and got rested was because if this happens now, guys, it's going to happen really quick. And a lot of people are just going to make bad moves out of just being exhausted. They're just going to burn out. So the more you just know, the more relaxed you are, things are going to work out good, man. And who knows, maybe you like this stuff and you start creating pools and create really cool opportunities for yourself, because there's a lot of opportunity here too.
Indeed.
Yeah. You might be one of the smart ones.
I found out where to get the data that we need, Wolf, to see what those APRs are going to be.
Yeah. You want to share?
First off, on the stable swap inside PulseX, it's 4.78%. So it's, you know, it's not really high on, like, it's still a stable coin, so that's not bad. So if, hold on, where was I? So if you go to the stable tab,
mm-hmm.
and then you press, instead of overview, you press pools at the top.
That's right. I think I'm there, right?
Yep, there we go. And then we can see the LP reward there, the second from the end, 4.78%, right?
Mm-hmm.
So that's what PulseX is paying on stables right now. And that would be very easy to get into, minimum button pressing.
I have a little,
so,
I have
you
a
know,
little
for a
bit in there
beginner,
right now. Yeah, I have a little bit in there.
Not a terrible place to put money. And I've seen that much higher. I've seen it be like 11, 12% of the past.
That's phenomenal. You get 5% on your money. It's great. I mean, come on.
Totally. Like, think of traditional finance. That's huge.
It's phenomenal.
But then if you scroll up and you switch to V2, we can see some more options that are going to be
here.
You know, and then again, go press pools instead of overview.
Yeah.
Now some of these are going to be very volatile. The number you see on the screen could change quickly, but look at the LP rewards on some of these items, right? But like, this does not mean they're good. It doesn't mean they're safe, right? It just means that's the number based off recent trading.
Okay, so you could take a big hit on a permanent loss on some of these, for sure.
Yeah, I don't even know what that first one is, right?
This one?
Oh, okay, that one. Yeah, is that pdai?
Yeah, guys, what is this? Is this pdai?
That's pdai.
This is pdai?
Yeah, from the logo. Yeah, from the logo.
No, 116%. Oh, from the logo you're going? Okay, got you. One
PDI here, let me drill down.
Is 181 pulse. Yeah, it sounds about right. It's kind of cool. It's pretty cool.
So, but that's, you know, your permanent loss there, one way or another, is going to be large. Chances are.
Yo, can I come back in 1 second? I take 2 minutes. I'll be right back. You got this?
Yeah, you bet.
Okay, cool, man.
Yeah.
I'll be right back.
Yeah, I'm just double checking which die that is, so we can give people reasonable information. So, but this is a great example, guys, of what I was saying about impermanent loss, right? So we all know that PDI is fairly volatile. Could go up faster than Pulse, right? Could go down faster than Pulse. And they will move up together. Obviously, if the price of Pulse doubles, then the price of pdai will be affected, but not necessarily as much in the other direction, right? So you could end up losing some of your Pulse, you could end up losing some of your pdai, but that's where you're making the fees. And I've confirmed that one is pdai, right? That is what that pool is, right? And then those APRs, right, where it says LP rewards, like that is, you're not getting that fed into your wallets. You're not receiving with the V2 pairs, it's not like it's, you get to claim your fees. It just compounds inside the pair, right? So there's a fee charge on the swaps, most of which, or a large portion of which goes back to the LP provider, a portion of which buys and burns PulseX, which is a cool thing about PulseX for sure. And then, but you'll end up with more LP tokens. You'll end up with more DAI, more Pulse, right? But it could shift so you have less Pulse and more DAI, or more pdai and less Pulse. It could go back and forth, right? And that's the impermanent loss that I'm talking about, right? So these assets are somewhat correlated, but they could be. This is a risky pair. Is kind of what I'm getting at here. But like $50, like PulseChain transactions are cheap, right? Like it's gonna cost you, like for the fees to enter this pool, right? It's gonna be 10 cents, 20 cents. We all know on some days it gets crazy, but like most of the time it's pretty cheap. It's like 300, 400 Pulse to move into a pool. Of course, you're putting your other funds in there, but like. Yeah, could you put $50 in this? Yeah, you totally could. And if the volumes keep up, right, like you could outpace in your gains from the APR, from the swaps, you could outpace impermanent loss. And that's the big trick here. And farming helps with that when you're getting an additional token like Ink or $2 or whatever it is, where you're getting paid to liquidity provide. It helps offset that impermanent loss. And there's some cool calculators for that I've seen. But the bottom line is that, the winners in this game are going to be the ones whose yield from either the compounding inside the pair, or the yield from the farming outweighs their impermanent loss. So that's the game right now, especially in this part of what I believe is the bull market.
The APRs will rise over time. Just remember, RH told the community to pull our liquidity on PulseX due to impermanent loss risk. Did he say that? I don't
Sorry,
know.
what was that?
KD says RH told the community to pull our liquidity on PulseX.
He told the community to pull liquidity on pdai. That facts there. He didn't tell the community to pull liquidity in general. It directly, however, he reduced the inflation on Ink, which directly caused people to pull their liquidity from the Ink farms, all those pairs. Though in the case of pdai, he directly said pull your liquidity.
He did say that directly.
Pretty much, yeah.
All right.
There was kind of a community call to action on that one. Some people interpreted it differently.
How did other people interpret
also
it?
Facts.
How did some people interpret it?
Well, some people interpret everything as bullish and nothing as bearish. So it's it's how you read into it, I guess.
I like bulls. Bulls make money, right?
The pdai guys I'm impressed by their resilience. Let's just say that. But yeah, my view was RH was not bullish on pdai, and asked people to pull liquidity. But as far as just getting people to pull liquidity on PulseChain, I believe he's never said this, but I believe he very directly encouraged people to pull liquidity by reducing their farming income by 97% on purpose, right? He pressed a button, he knew what the button would do. He did it in increments, like it went down by this much, until it was down, like the inflation on Ink was reduced by 97%, which was good for the price of Ink and will continue to be, but was bad for people who were in those farms. They were making way less money, which encouraged them, and he knows this, to pull liquidity, which the only good reason he would do that, in my opinion, is because low liquidity makes it easier for the price to pump. It also makes it easier for the price to dump, right? Because there's less liquidity to absorb cells. But I think he thinks it's going to pump. He got people to pull liquidity. What do you think, Wolf?
I think that, and I think I said this on stream maybe, that he didn't want, if he was going to peg pdai, he might not have wanted a lot of other projects to benefit directly off that pumping. And that's why he might have done it. Yeah, maybe I'm reaching a
Yeah.
lot there. He's not a
And what
PDI.
about the PulseX thing? Do you think he wanted people to pull liquidity, and that's why he turned down the yield on the PulseX farms?
Yeah, I mean, obviously he created the incentive structure, so it didn't make sense for you to do that, right? But I think that might have just
And it
been
pretty much doesn't.
I think it just might have been a byproduct of preparing for volatility, because he had to reduce liquidity anyway. Maybe that was just a second, reaction point
Yeah.
of it. It may not have been something he was even that interested in, whether you were staking or not. He may just-
Preparing for positive volatility, because if you were preparing for
Positive
negative volatility,
right,
you'd
right.
want more. You'd want more liquidity, not less.
Well, not
right?
necessarily. Why? It's still going to just make it volatile down and up.
No, but if you think the general trend is down, like over whatever period of time, and like I suspect RH looks further into the future than most of us. He's ticking pretty fast. But if you think that price is going to go down and you want to minimize that, the offset for that is to provide more liquidity, particularly against things like stablecoins, right?
Well, yeah.
So you'd want
Unless he does
Yeah,
want to
you'd
see
want,
the
like-
downside also.
also possible, yeah.
Yeah.
And there could be some 40 chess in there where, yeah, he wants it to dump before it pumps,
Oh,
and then he can
100%.
calculate his 10,000x from there.
Yeah,
Could be
man.
a thing.
Dude, market making is at the euphoria and at the lows. It's done every time. A lot of people think it's just, up when it's high, but no. The psychology in the market, it's constant. It's happening at the bottom and at the top. I think equally weighted.
If I was as smart as him, and I'll just pretend I am for a minute, and I knew there was some marketing coming out probably around September, from what I understand. I just got off a interview with a wild SJ, and we're talking about that.
Tell us what you know. Tell us everything.
So like in September-ish, marketing's coming out, right?
Okay. Yeah,
I'm
yes.
RH. I want to make 10,000x on all my new tokens as well as my old tokens. I might want it to dump a bit in the 2 months prior to that marketing coming out. And then when people start receiving these things in the mail, whatever they are, postcards 2.0, we know they're electronic. I suspect they're going to have a screen and a speaker. Hello, Richard Hart here.
Yeah, could be.
But I'd want that dump. And then when that marketing started dropping, I'd want insane pumps. So when people start checking it out, and these are normies getting this stuff probably, right? Not
I
crypto
agree with
bros.
you. I'm
They're
with
going to
you.
look it up and be like, oh, this looks hot, right? I got to get in before it's too late, FOMO, right? That would be how I would play it if I was much smarter than I am.
No, 100%. I'm with you on this one. Yeah. This could be what's going on. It's going to take some time.
Yeah.
My only issue with it is you got a lot of middlemen in this thing, right? There's a lot of points of failure of this whole process. So, I think it seems like they're planning for it to happen in 60 days, but obviously there's a place it's going. It all has to be packed correctly. It has to be sent out, received. Everything's got to work. That means, nothing gets shut down.
There's less middlemen than you would think.
There's less
I
middlemen?
think there's like community members who are like handling this stuff.
Really?
Like it's,
Okay.
look,
Okay.
it's, like I think it's there's more known things than others.
That's good.
SJ said the initial mailing is going to be 200,000 pieces, and that's just the test, right? And that's one container coming over from China, and it's one of many.
That's
right?
amazing.
So
Dude, what is going on?
yeah,
This is crazy.
it's gonna be weird.
Yeah. It's going to be weird.
I think it's gonna work. It's gonna be highly targeted, right?
Okay.
So they're gonna be targeting like people with money,
Okay.
and it's a mailer, right? We know we know it's a package. Like it's it'll be like bigger than a postcard, right? Like it's gonna come in a package. We know it's wrapped in bubble wrap. We know it has batteries inside. We know it says hex.com. Reliability, PulseChain.com, free coins, pumped up tires, new coins. We know it says that not outside the package, but on whatever the item is inside the package.
Interesting.
That's all we know. But like, if you're sending out mailers, you're like, I've done this type of marketing quite a bit in my other life. Your target is usually people between the ages of 50 and 65 who still have all the freaking money, right? So
fair enough. They do.
This will have impact, right? Like
The
on those
millennials
people.
don't. The Zoomers definitely don't.
Nope. Yeah. So yeah, to be like, yeah, Generation X and above, right? Like it's going to be, or we say boomers in crypto, which seems to mean anybody over 40, as far as I can tell. But like, people who are 65 now, right, know how to use computers.
Yeah. They do.
It's it's totally, it's totally uh, a different scenario than would have been 10 years ago. Like my dad is, he's pushing 80, but like he could figure out how to, do decentralized finance. Like he's been using a computer, for, well, since they were, he was using a slide ruler at one point, like in his profession. So, but now he can use a computer fairly well. So it's like, yeah, people who are 50, 55, like, yeah, those guys could buy crypto. It's not crazy at all.
Nice. Now, you actually sent me something. Do you mind if I pull that up now that we're talking about it?
Sure.
Do you remember? It was in the Telegram. It wasn't private, right? It was something you were...
I'm not sure.
Just double check.
When did I do this? Was
I'll
it
throw
today?
in the chat really quick. Make sure that before I do it. Let me see.
Yeah. If I send it publicly, then it wasn't private for sure.
Hello. What's this? Are you gonna come with me? What are you doing? Pups, everybody smash the like button. This one, check it out. I just put it in the chat. I can share that, right?
Oh yeah, totally. And that is not like confirmed information as far as I don't know this is going to happen.
Speculation.
But I think this is, yeah. Triplet Dad came up with this, and I looked at it and I was like, yeah, that looks like it makes a lot of sense. It could be this thing.
Okay, Pups, this is pure speculation, okay? Like, completely. What is it doing?
Look at that. It's got a speaker, it's got a screen, and it's in the shape of hex.
Jerome Pocapan Food Public Company Limited and its subsidiaries.
Chad, have you guys seen this yet?
Is the leading agro-industrial and food conglomerate in Thailand. The company operates a total
I think it's rad, bro. I think it's cool.
Farm to table, with production bases in Thailand and overseas. With the vision of being a kitchen of the world and its core values leading to continuous...
Okay, let me play this again. This is cool.
Yeah, it's pretty cool. Like, and obviously that's not the product itself. This is just something found on Alibaba, but like, this is meant to be mailed. Like that's the purpose of this company is producing mailable items that can go out as marketing mail, meaning that they can be mailed for like 30 cents.
30 cents?
Yeah.
But how much is the cost of each one?
So how much does it cost to
for each
buy
one?
them?
Yeah, $1.50. How much are they?
On that website, like it's actually there. It gives you a price. It's like $6.
Oh, it's pretty pricey.
Like that's price per 1,000, but like the price per million is going to be lower. But it won't go down as quickly as that. But let's say it was $4 a piece, for
Okay.
example, per
5
million.
Okay.
Could so, but like she's talking $4 and then packaging. Like it might be by the time the dust settles with shipping and everything, it might be $5 to $6 a piece delivered.
So, bro, if you're gonna do a million, so let's say it's $5 with
$6 million
shipping,
bucks.
$6 million bucks. Yeah, I guess it's affordable
Yeah.
for a marketing campaign of this size. Sure, okay, I'm with you on
Totally.
that. Yeah.
Yeah, and that's like a million pieces targeted and it's all about the targeting, right? Like, and like with USPS, I've done a little research on this. I know more about Canada Post, of course, which works very similarly. But like you can do targeting by postal code.
You
There's
guys get
data
mail in
on
Canada?
demographics of like. Sometimes it takes months delivered by dog sled, but yeah,
the
we do.
dog sled now. Okay.
But like you can target by demographics of like how like where people live, how much money does this neighborhood get? You
Yeah.
know, like you pick postal codes or zip codes in your case, or in the USA, zip codes with or portions of zip codes where people make the most money, where they're in an age group that you want. Like all this data is very much available. So, and then there'd probably be something to track it. Which could be as simple as checking the results on PulseChain.com by IP address of like how many people logged in from which IP addresses to be like, okay, these mailers worked here and they didn't work as well here, right? Or there could be a barcode or something people scan that will, transmit some data about, like not like sensitive data. I just mean like, somebody who got the Hollywood mailer scan the thing, right? That's all it would be, right? So,
right.
and it would provide data for the next mailing, and the discussion with SJ today was the first one is 200,000 people, but yeah, we're shooting for like 10 million units coming out, something like that. So the data from the first one will feed into the second one, which will feed into the third one, until the last million that goes out will be so targeted that it will have like a 99% open rate and like a 30% hit rate of people actually clicking the button, right? So it will get better as it goes.
Interesting, man. This is really cool. I love the hexagon shape of the one.
Shenzhen Huihong Technology Company Limited has been founded for 17 years, focusing on provide one-stop service for R&D, production and sales of advertising players, video display devices, and other related products. In our products, a magazine, an invitation letter, even a business card can bring you new sensory enjoyment. Here the content is no longer boring. The form is no longer single. Our company has a number of outstanding senior engineer and professional designers to provide full professional services from concept to delivery of finished products and after-sales service. The production workshop has a number of experienced production management and technical personnel, 4 standard assembly lines, advanced production facilities, and 104 skilled production workers. We have formed a professional and efficient service team and have a close cooperative relationship with a number of frontline solutions providers and spare parts manufacturers.
Whoa, this is crazy. Your future is in these people's hands, pups. PulseChain is writing.
The annual output reaches
like
1.5 million
man.
units.
They're a good team.
Each product must pass more than 5 times strict inspection and aging test to ensure the excellent quality of products. Now the product we produce has reached the first-class level in the industry.
Look at that.
In the meantime, our product has passed CE, FCC, ROSE certification, etc.
Wow.
With the joint efforts of an experienced and professional team, our products have been exported to more than 100 countries and regions, especially the US, Europe, Australia, Southeast Asia, and the Middle East market. Also won praise from many international brands in the world.
Nobody does this stuff better than China. It's just the truth. Like if you tried to make this in the USA, they'd be $40 each, and there's just no way around it.
This could really be something special, man. This could be something where way in the future people still have these and they remember this time period. You know what I mean? That these went out. Like this could be really,
Totally.
This could be a cultural moment. Because just in the fact that no one's done this, that in and of itself is going to have everybody talking about it, right? Which is you're buying advertising. This is $6 million. You're not just paying for this. You're paying for the fact that now everybody's going to talk about it. They're going to be, Cointelegraph, everyone.
It might hit the news. You know, like 10 million mailers go out from Richard Hart. Yeah, it could be a news item.
The man who beat the
and obviously, like these media people are going to get these personally.
Yeah,
like, it'll be huge.
100%, man. And it'll be titled like the man who's wanted by Interpol has just now mass mailed the United States.
Huge.
I want to see this hexagon one again. This is great. I love the hex one.
I think people have to remember that they're probably not the target audience too. Like if you're watching this and you're like, oh, I don't want that. It's like, it doesn't matter, dude. It's like, you're not the target. You're already here.
Yeah.
Right. It's
I want one.
It's like the 55-year-old dudes who are sitting on bankrolls. That's the target.
If I don't get one, I'm going to be very, very offended. I better get one.
You're definitely the target audience. You'll get one.
They're definitely not coming to Eastern Europe.
Maybe not. Maybe small segments, right? I think that'll be part of it.
Or CPF Group is the leading agro-industrial and food.
Dude, I love the reverb in there. This is awesome. This is going to be cool. I'm actually really excited now. This is cool. RBTC says this is insanity. What do you think? Chad, what do you guys think? Is this crazy? I think it might be something just like this. This is... I'm feeling it.
What's it gonna say, right?
Thailand and overseas, with the vision of being a kitchen of the world and its core values leading to continuous.
This is great, man. You better do the Dancing Girls, the K-pop or something. This is rad. Love it. I love it. I'm really excited now. This is cool. Handmade design, VIP invitation greeting card, 4.3-inch advertisement LCD screen, brochure with speaker. Yeah, this would run right off one of those little photo batteries perfectly. Probably get it to work for maybe a few weeks before it dies. It's probably enough time to do what it needs to.
It could be rechargeable too, like they're lithium ion batteries.
Are they?
Right.
They're
That like those
lithium-ion?
CR2505.
Okay. Dope I ever smoked. Instead of taking care of Interpol, he's losing his time with this. You think so, RBTC?
You're not the target, RBTC.
You're not feeling it? No expectations, boys. No, I think I understand the potential marketing capabilities of this. I don't think he needs to worry about Interpol.
It doesn't
though.
mean it's the whole marketing plan.
Yeah, does he need to worry about Interpol? I don't think he needs to. As long as he doesn't travel, right? He's just got to stay in his bunker.
Who knows where he is? Yeah. But Interpol has nothing to do with mailing in the United States, right? Like this is not, it's not in their purview.
Right.
And these are being mailed out by charities, which is the other interesting part of the plan. Is a couple weeks ago or months ago, I started to encourage people to set up charities in other countries representing, blockchain and immutable code on the internet, stuff like that.
Okay.
And those charities are the ones who will receive these packages without paying customs because they're charities, and will then, and most countries, U.S. for sure, offer a discount of up to 50% for charities to do mailers. So we can see the 4D chess in motion.
Interesting. Who is a charity or that is blockchain based?
There's been charities set up specifically for this in the USA. There's talk, somebody's working on one for Canada, same for Australia, I believe, and I'm unsure of the European status.
Got you.
They're still looking for help with all this kind of stuff, though. So, yeah, SJ's got a Telegram room, and people are just interacting there, right? And if you want Richard Hart to read that you're part of the community, I bet you interacting in that Telegram room is probably one of the best ways.
Okay.
Don't spam it with bullshit; they'll just block you.
Got you. Well, I might or might not have started a charity in a country that's very neutral.
Okay.
And not far from me.
That would be very relevant information. I would encourage you to share that information.
I was keeping it private.
Oh yeah.
Okay.
No, they want that specifically. Yeah, the SJ needs to know. Reach out to SJ directly in your case, and then and then start to talk to people, man.
Okay. So what are the target?
That's what Richard asked for. But in Europe, it could be a charity in one country that receives them and then ships to other countries. All kinds of games could be played there. So yeah.
Yeah,
if
it depends where it is. You're still relying. I mean, I guess at these big volume deliveries, I guess it would happen, but I didn't start it in Germany or Poland. It's a smaller country, but okay, we'll see.
That could be better because there's an arbitrage in mailing rates in Europe, right?
Yeah, there is.
It's cheaper to mail from some countries than others. So depending on the nature of what that is. That could be the ticket.
Okay.
Is it a European Union country?
No.
I don't know what effect that would have, but
could be in the future.
That's probably going to be relevant somehow.
I made sure to keep it outside the thing a little bit.
You started a charity in the Ukraine? Interesting.
I can't say anymore. Yet.
I have some guesses, but I'll keep them to myself.
Yeah. I'm gonna keep it private right now.
But yeah, that's the kind of help they want, right? So, but it's good. It's also going to come down to help handling things, contacting printers, contacting, post offices, the actual, grunt work of getting this thing out. And it's very much the community that's doing it. Rich is doing kind of like a cyberpunk thing with like, he's not doing it. The community's doing it. He's asking for help. He's got these open threads people comment on. And yeah, so I think it'll be a thing. Not everyone will agree.
No, I mean, it's
But
definitely.
I think everyone should agree. Everyone should agree it won't be a zero effect. It's not going to do nothing.
We have 555 people viewing right now. Everybody smash the like button. Oh, it just went up to 557. Still, everybody smash the like button. It's good luck right now. RBTC is not having any of this. He's saying this cult has lost the plot. That's funny, man. We've lost the plot. So I'm hoping that Hex doesn't lose the plot here. I think it should be fine. But yeah, there's definitely some room here for for one last drop for sure. I'm not crazy about the way that looks right now.
There was a big whale that
that's
dumped
right.
Hex, I'm pretty sure.
That's why it looks the way it does. Yeah, I'm not crazy about this right now. Maybe that explains it. Let's see what happens. But if we do get that shakeout, like I'm saying, I'm anticipating that once we tap here, 113, 113.5, I think that will be just slightly above the high, and then I think we may have a little plop, and maybe that could send it down, unless another whale who's bullish comes and undoes it. The damage that we see over here right now. So, yeah, somebody damaged my charts. They got damaged a little bit here. Okay. It is what it is. We're close, pups. We're close. RBTC is a sacrifice. Let's fucking go. We are the plot. Is the dumper done?
Mm-hmm.
Somebody, I did hear somebody else has another big bag. Or was that an old post of Hex?
There's always someone with a big bag, right? Like,
It's
always someone selling. There's always somebody buying. I thought it was pretty juicy at the recent lows myself. I may have nibbled a bit.
It's a fine place to be nibbling, man. Yeah, I would never get fickle at the bottom, man. When you're down at these prices, don't be like, oh, I got to get it lower. Just start DCing, man. You'll thank me one day for that. Because when you miss those
Agreed.
bottoms, that you get what's called a lockout move, okay? And they happen very quick. You see G baby, it went from 174. What's that at $9? Look at that, in 2 seconds. You get these big moves. You can see ATROPA. I've shown this before, and it's on all the 4-on-4 charts. And I said it was going to happen. It's this move right here. You get these lockout moves, right? So if you're trying to wait for something, it may not come, and then bam, the price just 5x's on you in 2 seconds. I'm kind of waiting for it to happen here on Teddy Bear still. I have it drawn here. I'm anticipating that move to happen. And then we get lockout move into a hammer. It still doesn't happen. I keep moving it to the right. It's about to happen. I think it did it on pdai too, so go look at pdai.
Yep.
What happened to this Hawks thing? The other Hex. It's not bad looking at all, actually, to be honest. Okay. Not a bad looking chart. 689 on Wrap Bitcoin. Yeah, this one's looking really good. This and ATROPA. Fire.
You can get some good good press on Wrap Bitcoin lately. Rackham did a post on it that
Did he?
Got a lot of eyes.
Okay.
Yeah.
Is he going to ever go do any interviews on shows? Is he going to go around?
That's a good question. He's probably the most well-known whale, him and Fire Whale, of course. So I think he's getting more, he's getting louder. I wouldn't be surprised, if he started showing up on YouTube.
Are you friends with him?
He's been in spaces a lot lately.
Has he?
YouTube, X Spaces, yeah.
Really? Okay.
Yeah.
Like on KR, the Ghost and Panos, or some other
Yeah, I
space,
think-
or
I think he's been on with KR and with the PTGC guys, maybe.
okay.
I'm not tracking the guy's movements or anything, but just casual observance.
This was crazy. I drew this one perfect. It's ridiculous. It got all the way up to here. Bam. So this might have been people waiting for the low, and then you see it just whipsaw it straight up. And this is that bullish hammer right here. So this looks like it's going to keep going up. BFF looks very bullish as well. So this is what a bullish hammer looks like right there. That looks like it's going to pump from there. Oh, there's DAI. There you go. Okay. Ooh. Oh, there's a little nice big juicy dump there on that. Got bought up quick. Just like ATROPA, very similar charts right now. Now they're kind of like coming close to each other. Where did ATROPA go? Let's see PTGC really quick. Got a little green on PTGC. It's coming back to retest that breakdown. Let's see what's going on. Yeah. Okay. This, yeah. Not looking great at the moment, but it's tied to a lot of things. Really depends on the bigger picture, what happens. Titan X, just out of curiosity. Whatever happened to, remember there was that other group that vampired and took off and they made some other token? There was Titan X and then there was somebody else, right?
There was Zen.
Zen.
There was Titan X.
What happened to Zen? Was that did that become a thing?
Well, it never stopped being kind of a thing. And I stopped following it very closely, but Jack Levin, who, like for sure vampire attacked the PulseChain community.
Yeah, I remember.
It openly, so he made jokes about it. It's fine. So yeah, he encouraged people to do all this work, mint all this, and so on and so forth. All with the pretense that he was going to launch this X1 chain, which I have no reason to believe that he's not going to. I've seen a lot of FUD on Twitter lately about him, changing the rules and doing things that, to not pay the people who did all the work in the long term, that kind of thing.
Yeah.
But he's still definitely working on his X1 chain, which I think was maybe a fork of Solana, something like that technology, which is different. It's
Really?
supposed to be fast. It's supposed to be all these things, but very few people have actually made money on his stuff. Like, it's like you pressed a lot of buttons and you didn't get paid is the status of most participants at the moment. So he's in the FUD box at the moment.
Let's see what's going on.
But he's pretty vocal. He would probably talk to you about him himself. He does show up. I will give him that. I don't like what I perceive to be bait and switch tactics sometimes, right?
Mm-hmm.
And he's careful with his wording and all that, but it very much seemed like, oh, now make money over here and then the old thing goes away. Now make money over here and the old thing goes away. There's always somebody left holding the bag when that's the game, right?
Right. Let's see what's going on.
As far as the Titan X thing goes, that's another very good example of people selling their bags at the lows and moving into something else that then goes down. I hope that goes to the moon too, right? I know there's a lot of good people in those projects, and I know some of them have worked really hard on things. So I'm not writing any of this stuff off. I think it's a cautionary tale sometimes that the game right now sometimes is people try to get you to give up your good coin for their crappy coin is, the tactic. So, you have to, I'm a founder myself. I understand that things cost money and that is part of the game, but is it an overall benefit or is it an overall drain on the system? Right. So, and some of these things have been an overall drain to date at the very least.
Got you. Oh, we come over here really quick. There is, where'd it go? Oh, here it is. There's not really any spaces going on right now. Executes live stream. We are really the only thing really happening right now. You can see over here, there's not really spaces right now. We have 500 people listening for X. Is this really BitBoy right now? I mean, what's his name? BitBoy, right? Yeah. No, is this real?
BitBoy?
Or is this some AI?
Like Brian Armstrong?
Or yeah, Brian Armstrong, BitBoy.
Oh yeah, no, that's him. Yeah,
that's him.
100%.
Huh.
Yeah, he went to jail the last time I checked. I did a stream with him once, and he looked better than that.
He looked better than that, huh? He's losing the plot, huh? Poor guy.
Kind of seemed like he was going crazy. At first, I thought it was like maybe some sort of marketing tactic, like he was like making it interesting so that people would view. But going to jail seems to be taking that a little far. It is interesting, but I'm just saying, like, maybe there's a line. I would draw that line before jail myself.
Damn. So he's in jail.
Last time I checked.
Damn. He really wrecked his life.
I don't know for what. I honestly have no idea.
Huh. I think. Oh, hey, buddy. I think it's just like an energetic thing. Okay, I was looking for something. Where'd it go? I had something. Oh, there was a funny B Roots I posted to look like something really animated.
And I'm going to lose a bunch of money. So, for example, if I put 10 arbitrage bot is going to come in, and I'm going to lose a bunch of money. So, for example, if I put $10,000 in, but I mess up, and I put 300 hex per pulse, or let's say if I really fat fingered it did 100, right? Well, then some arb bot would come in, and they would say, oh, look at this guy. He's selling his hex for dirt cheap, when really I can just dump it on the main pair for 200. So some bots would come, they'd buy all your hex for...
Where'd it go? I don't know where it went. I lost it. Oh, there he is. Okay.
What's up, it's your boy? What's up, it's your boy?
People are getting excited, man, again. People are getting excited.
In the
It's good.
Maserati. Hey! Back at it again with another video. Going from the Cybertruck to the Maserati. Cybertruck to the Maserati. Hey! Peeps.
Filming's not your strongest point.
If you're not a PulseChain,
It's funny.
peeps. If you're not
He's a pretty funny guy.
Yeah. Yeah, he's a great guy.
Peeps.
And he knows exactly what he's doing, right? Like, it's he's in an entertainment industry and he understands.
He gets it. Yeah, yeah. He knows how to grow.
Hoorah! What's up, it's your boy.
People getting pumped up. You have no idea how many views I
I know
get
he
because
gets
of my camera.
FUD. He gets some FUD, but I'm glad he's on the team overall.
Yeah. No, he got it. Exactly what you're saying. This guy was like complaining. Well, he was not complaining. I think he's also being a little joking around. He's like, filming's not your strongest point. But he goes, I got you to stop and respond, which is, he knows how to get people engaged with PulseChain and what's going on and, what he's up to.
Yeah, that's a perfect example.
Yeah. And that's genius. That's what it is, right? How do you get people to stop and look at, what's going on?
Yep.
Exactly.
It can't be freaking boring all the time just talking about numbers, right? Like, it's it's too lame.
Yeah, 100%. All right, let's go back to the chart really quick. But we got some liquidity done. I do want to continue. And like I said, if you guys think of somebody else you'd like to see as videos about liquidity, there's a lot to learn here. The reason I'm interested, not because I'm going to just start liquidity providing, I said this before, I think it helps you understand what's happening in the market. It also helps you stay cool as you see the price movements, because you understand kind of what's happening, in the background, backstage, so to speak, at the show. So, because managing your emotions as price pumps, like we all think we get it. Like, trust me, it's going to mess with your head. It's going to be absolutely crazy, and you want to be as cool as possible. So I do want to watch more videos on liquidity providing, because it really gives you kind of like a back, like what's happening, behind the curtain sort of thing. And it helps keep you cool-minded, and you see that, okay, it's not a magical thing. There's just, pools, and money's going back and forth, and I think it's good. So if you guys think of anything, somebody else you want to watch, we could do it. But we got 3 more episodes with the sloth, so as we have more time and we're waiting for stuff to happen, we'll throw them up on the next sesh, and we'll listen to them. I think he did a really great job.
He does. He's a smart kid. Like, he's a real dentist,
He is a dentist?
Like, he has a dental degree. He's a legit, like, he's a doctor. Like, it's Dr. Sloth. Yeah.
No, that is hilarious.
Yeah, for real.
That's great.
Well, one day he's going to be my dentist. He's going to give me some implants if I keep getting my teeth knocked out.
We're still just going sideways on ink. You know, it is what it is. We've
Yep.
been going sideways a long time. It's squeezing down, man. It is squeezing. It is getting ready. Let's come back over here at BTC. I'm waiting for this 113. How it deals with this line right here is going to be very telling. So let's see what happens. This is going to tell us a lot. Whether we're
Did we hit a new all-time high today?
Nah,
I saw
nah.
something about that, but I didn't confirm.
Nah, double top. No.
Oh, okay.
Yeah, it's just double top. No energy.
Mhm.
Well, we got to see. We need to get it right here in my target, and then see how it contends with this, and that'll tell us whether we're about to rip or we're gonna dance for a little longer here. You see Ethereum
Nice.
looking good, but once again, it's really at this line too. I also was anticipating this to happen. I didn't know when. I just knew we were going to. Actually, I mean, this was actually pretty damn close, and I drew this back in middle of. We were over here, and I drew this. So obviously, we did hit this moving average. We've come up. We actually followed this almost to a T, and we are now dancing with this resistance line. So same thing. We got to see what it does. Is it going to be rejected? Then I think we go sideways and maybe a little bit down. But I do think we're going to rip to the upside. But it's not going to happen when everybody expects it. I think everybody was too like, you know, middle of July or right now. It might be at the end of July. Like, I don't know when it's going to be. I think a lot of people were just really bullish, not just on PulseChain, I mean, just in general, because of course you see the total 3, everything is bullish. But I don't know if the market maker is just going to hand it to us that quick. It'll happen like some random moment here. Let's see. All right, I'm going to keep an eye on this too, but I'm going to go to bed. I'm going to wrap it up. What is it, 12:30 my time. And yeah, we'll try to stream again tomorrow as well, because something's going to happen soon, guys. We're getting close.
Hell yeah.
I want to be live when I want to be live when this pops, because I think we're going to see some God candles.
Oh, definitely.
Even if we get it done first, that's fine. It's coming. We're almost there, pups. We're almost there. We're almost there. We're really close.
Agreed.
And once again, shout out to Mr. Sloth. Thank you so much for your videos. Everybody go smash the like for him, and smash the like for this video as well. And come to the Telegram if you haven't. St. Wolf Vision. And Fast, was great seeing you. You want to wrap us up with anything?
Man. Yeah, no, I think the message right now, like you said, is like, you know, good things could be happening really soon. Whether it's September or it's August, like, I don't think now is the time to sell. Not financial advice, just how I'm feeling.
Definitely not. Definitely not. All right, chat, you guys are amazing. We've got some new mods too, so thanks to everybody. We'll see you tomorrow. All right, night.
All right.